everyone for joining on this lovely afternoon. My name is Nisak Jani. I'm a research analyst at the Geostrata and a research staff member at Covering China, the arm of Geostrata. This presentation and research has been done by China Policy, who is co-hosting this event with us. And we will be focusing on Beijing's policy thinking on service trade. To give a brief about our co-host here, China Policy is a strategic partner in navigating the PRC market. So it's an Australian-based intelligence and advisory firm that specializes in mapping, analyzing, and tracking China's policies, and look at how PRC regulatory and economic landscape is evolving. And they have a specialized team across economics, trade, agriculture, science and technology, energy, social policy, geopolitics, governance and law. And CP Global Insight is their strategic advisor, right? And they cater to a length and breadth of clients, which also includes certain not multilateral organizations as well as governments. As you can see, they are partnering with HSBC, European Commission, UNDP, the Australian government, of course, the Royal Norwegian Embassy in Beijing, and others, as you can see on the screen. I'll also introduce our guest, Mr. Alex Wong, who's a trade policy expert focusing on service trade in China. So without any further ado, I'll give it to Alex. Alex, the floor is yours.
Thank you very much, and good morning, good afternoon. I'm very happy to be here to talk to you about China's services trade today. I'm very happy to speak for Geostrata on this topic. And to give a bit of an introduction, for some people, like if I talk to you about services trade, you might be thinking that, oh, this is a pretty technical area. You know, it may not be as like sexy as the tariffs and trade wars and all the stuff that you see on news headlines. But in our view, this is very much an area that merits your attention. There are quite a lot of movements in trade. It's definitely on Beijing's mind, and therefore it should be on yours as well. I will start off with my 5 main messages today. Number 1, services trade has the potential to be a growth driver. Also be useful to note that the sector is comparatively underdeveloped and closed in China, so there's room to grow. Number 2, in thinking about services, Beijing does not see the sector independently in silos. It sees it as a growth multiplier for various sectors, so not just services. And number 3, the focus now is on diversifying trade and strengthening domestic capacities. And number 4, China's opening up in this area will be gradual and strategic. And number 5, more policy moves and adjustments ahead are expected. And on the next slide, just to set the stage a little bit, we're going to go through some current trends about services trade very quickly. Most of this is not really new information, but I think it's helpful to familiarize ourselves with some of the fundamentals and the nuances first, because as you see, they are also very relevant as we jump into unpacking the policy thinking and the policy movements in the later portions of this presentation. Next slide, please. Services trade in China is growing, and it's also growing in the rest of the world faster than goods trade. It now makes up 1/4 of total world trade, and in China, it has posted double-digit gains annually since 2021, and it now makes up some 1/8 of total trade. Next slide, please. China also has a consistent services trade deficit, as you can see on the graph on the left. Imports almost doubles exports. And as you can see on the right-hand side of the graph, a big part of the deficit is China's outbound tourism, travel, and education. It will also be useful to note that this outbound tourism and education actually counts as imports, because even though the Chinese consumers, they go abroad, they're buying things, these are purchases from foreign countries, so they also count as imports. And next slide, please. In China, as I talked about, opening up, the pace of opening up remains slow. The sector is much more restricted compared to OECD and the rest of the world. As you can see on the left-hand side of the graph, China is much more restrictive in terms of services trade openness. And also, you can see like the 5 different categories of restrictiveness, and China also ranks higher than the rest of the world. Next slide, please. And on this slide, we will look into a bit into China's services trade by different modes of supply. So for some brief context, according to the WTO, there are 4 types of modes of supply for services, services trade in particular. And mode 1 is cross-border trade, where services are supplied crossing from one country to another country. And then mode 2 is consumption abroad, which I also talked about briefly. It involves services being consumed by people from a country in another country. And mode 3, commercial presence, where the services are supplied via one member from another country, setting up a presence in another country. And last but not least, mode 4, which is the presence of natural persons. Services are supplied by people from one country that move to another country. And here we see that mode 3, commercial presence, are growing most significantly in China for both exports and imports, followed by mode 1, cross-border trade. And we also see mode 2, consumption abroad, imports narrowing since 2018. So it's less Chinese consumers traveling in the recent years have contributed to that. And in terms of historical figures, we see more policy space to expand mode 1, 2, and 4 particularly. And as you'll see later in the presentation, more policy moves have in fact followed in those areas. And there have also been efforts to address the problems faced by mode 3 commercial presence, which involves some beyond market access trade barriers. So it's beyond just granting them to set up business, but all the other problems that they'll face. And that's something we'll also dig deeper in the presentation later. And on the next slide, you also see that digital services is also a big part of services trade, particularly digitally delivered services. And it's about 40% right now. It's also growing significantly. And Beijing has also set targets to grow the sector for 2029 and for 2035. And on the next slide, we'll just give a very quick snapshot of China-India services trade. So India is China's 10th largest services trading partner following WTO data, after US, Singapore, South Korea, and some European countries. And India accounts for about 2% of China's services trade. It has a services trade surplus of about 1.6 billion US dollar. That is contrasted with its goods trade deficits of about 99 billion with China. And some of the top services imports China imports from India include transport services, travel, computer services, professional consulting services, etc. And for PRC services exports to India, it includes transport services, technical trade related business services, and also computer services. And moving on to the next section, I will talk about how Beijing sees services trade. It does not see services trade the balance that I talked about, that there's a deficit. They don't necessarily see it in binary terms, as in they have to close it. And also, unlike the statistics that we just covered, which more or less treat services trade as a standalone subject, Beijing doesn't necessarily see it that way. It sees it as a multiplier of long-term growth across different sectors, and not just services trade, but also in other industries as well. So what does that include, right? There's a long list of things. The economy is very broad in China, but some top contenders include supporting goods trade. So the services that are related to the goods trade, that China has a very robust sector, and also bringing in some foreign tech know-how and the market discipline, and also bringing value-added jobs to the slowing labor market in China, and also growing and upgrading the domestic economy, diversifying and reducing some risks, etc. And on the next slide, which is more about the domestic economy, like I said, services trade is very much connected to it, especially in the job space. Following China's Bureau of Statistics estimates, services actually create 1.6 times the jobs of manufacturing, and its value added rate also doubles the industrial sector. And at home, there's also the idea that China has a very abundant population, which creates a great number of service provision and also consumption opportunities. And on the next slide, we see that services trade is actually also connected to a lot of the geopolitical headwinds that we talked about that China is facing at the moment. And on the left-hand side, we see the MOFCOM Research Institute services expert, Li Jun. He also talked about how US tech restrictions on China is also impacting its services trade, which is prompting Beijing to strengthen ties with other partners in this area. And this is a view shared by the expert on the right, Zhang Monan from the China Center for International Economic Exchanges. She also cautions that the trade war, which it has focused more on goods and tariffs so far, can also spill into restricting services trade. And she cited the example of Trump's threats to put tariffs on Hollywood films. So that's like an area, like we talked about, cultural services. That's also an area of services trade. So that's also a potential area for like retaliation and getting caught in the trade war and things like that. And in the middle, we have Mei Xingyu from another MOFCOM Research Institute expert. He takes a little bit of a different view here, and he's saying that against all these rising protectionism, services trade can actually be a sturdy growth pillar because there are less traditional trade barriers compared to goods trade. And on the next slide, we can see another point to the direction that we talked about. And here we have a Chinese expert who, while citing some unnamed official sources, he argues that Beijing can actually retaliate against Washington's trade moves, tariff moves, by leveraging China's own large services trade deficit with the US and curbing some of the imports. And on the next slide, in terms of the geopolitical angle, well, one can say that, this is not the first time services trade is caught up with like trade or political disputes. That's true. But I still think that this angle in the current climate is worthy and timely because number one, US restrictions on high-tech services are affecting China's tech and service abilities. And more indirectly, tariffs and restrictions on Chinese goods mean that China is more pressed to look for other growth drivers, and services is considered one of them. And also considering like the magnitude of this round of trade frictions, we should probably also consider, different segments of trade, and services trade is something that we should also keep a close eye on and monitor developments. So bringing all of these policy thinking together, how does that translate into concrete policy moves? We think that it essentially comes down to this mantra that we have on the top, where Beijing's roadmap would be about diversifying trade and also strengthening domestic capacities. And this is relevant for the geopolitical reasons that I mentioned, but it's also relevant for the part where we talked about how services trade is considered a long-term growth driver. And also Beijing is very invested in this idea of developing like the domestic economy, upgrading it in the longer term horizons. And we believe that Beijing is working towards this goal through a range of policy guidance that we'll also discuss in greater detail. And the major themes here include providing more support, whether it's fiscal or policy, on exports and consumption, building synergy across sectors, backing certain champions, certain sectors, and institutional opening, which is Beijing's way to reform its domestic economy to open up for more services trade, and also forging more global partnerships to diversify trade with various different partners. And on the next slide, we can see that services trade has, in fact, come to the forefront in policy conclaves and documents. And on the next slide, we actually see that there's the third plenum in 2024, which called for innovating and upgrading services trade. So that includes innovation, not just in the technology, but also in the business models involved, and also in the institutions involved. And in the 2024 State Council released an opinion which flagged some of the key domains and priorities for services trade in China. And the document itself is also considered as the center's latest game plan for services trade in the new era of all these new changes and developments. And also Chinese Premier Li Qiang also mentioned and emphasized services trade in a recent State Council study session last month. And he talked about how changes in the external environment and also industrial restructuring means that China needs to catch up to advance economies in services trade. And on the next slide, we can also see that the 2024 State Council opinion that I mentioned also leaned more on supporting services exports. As you can see, it has more references about supporting exports compared to imports. And the opinion also urged for more support for services, particularly in some of these key areas that are highlighted that you can also see in the table in the middle. Some of these are services that helps goods trade and also advanced manufacturing, professional services, etc. For imports, it also pay attention to that. It doesn't completely ignore it. It also talked about which are the areas that China should import more in terms of services. For example, areas that the country urgently needs, such as productive services that we also talked about, medicine, entertainment, green services, etc. And over on the next slide, we can also see that supporting services exports is also a theme for other policy vehicles, aside from the State Council opinion that we talked about. For instance, the Central Service Trade Guidance Fund has also aimed mainly at supporting services exports, particularly some of the sectors that are listed by top-level documents, such as the State Council opinion that we just covered. And also loan support from the Export-Import Bank of China, as you can see on the right-hand side of the graph. It's also focused more on supporting services exports. As you can see on the graph, the blue sort of bar is the export services loan annual balance. And on the next slide, excuse me, to zoom in a little bit on the Central Guidance Fund that we just talked about, it's convened by central agencies such as MOFCOM, Ministry of Finance, and also China Merchants Group. And it has a total scale of 30 billion yuan, and more details about the second batch of the fund has been announced recently. And the fund invests in services trade firms and also the funds that invest in them. It positions itself as a patient capital that is aiming to help the long-term development of industry champions. And in June 2025, it was reported that a Chinese online sourcing service platform for industrial custom parts and components finished its services B+ funding with investment precisely from the Services Trade Guidance Fund. And you can see here that the fund supported exactly an area that the State Council opinion also highlighted, which is services trade that can help manufacturing and also goods trade. Next slide, please. Aside from support for exports, there have also been moves to support consumption at home. And this is grounded in the logic that the services sector contributes a big chunk to the economy. Recent moves include a 2025 services firm's loan interest subsidy policy, which was released last month. And experts in China also expect to see more moves to support services consumption as a driver of domestic demand. And they also recommend more demand side support, not just supply side support, and also expanding the consumption promotion program, the massive upgrade and trade-in program in the last year or so to also cover services consumption. Next slide, please. And moving on to the second theme, a focus here is also to build synergy across sectors. And this is something that we've covered, for instance, when we talked about how China sees services trade as a growth multiplier for different sectors. And for also when we're talking about the State Council document, it also mentioned like supporting services that can help goods trade and also advanced manufacturing. And then we also see how that have been picked up by the support provided by the Services Trade Guidance Fund. And here we have two experts that help us understand the context a bit more. I think we're on the previous slide. Not this one. Yeah, this one. So the two experts here help us to understand a bit more about what it means to like build synergy across sectors and why this is helpful. So on the top, we have Wang Xiaohong, the CCIEE expert, who mentioned that as the world increasingly like cooperates and distribute their production capacities globally, services trade is actually acting as a key link for Chinese manufacturing and also outward investments. And on the bottom, we have Huang Qifan, the China Institute for Innovation Development Strategy expert, who also explained that this comes down to the fact that a country's position is ultimately determined by the position that it's in the global value chain. And that is also very much relevant to the country's level in productive services. Because as we know, like making things is not just about the process of making them, but it's also a huge chunk of how to coordinate that, and that is services. So the country's position in the global value chain is also determined by how advanced its productive services are. And these two experts really just help us bring it in together, like why is China emphasizing in some of these sectors and why in particular building synergy is so important. And on the next slide, we can also see that it's not just synergy between services and manufacturing, it's also services and high-tech digital industries, particularly to capture some of the digital services growth opportunities that we mentioned in the beginning. For example, upgrading China's services outsourcing from doing just more basic fundamental tasks to providing higher value services, integrating emerging technologies. Some examples include China's top tech firms exporting their large language models, integrating AI into their online systems, such as online payment, marketing, and etc. Next slide, please. Besides building synergy that we just covered, Beijing is also signaling that it will back certain services trade champions. Recall, like in the beginning, we talked about Mode 2 consumption abroad. Services trade has been slow. This is an area where moves are also underway to prop up the sector. So Mode 2 consumption abroad is tourism and overseas consumption of services. So that includes things like tourism, education, and we've been seeing that outbound tourism has been encouraged by Beijing, particularly after the pandemic, by these new visa-free arrangements. And these new initiatives are pushing Chinese travelers to more countries for travel, particularly Belt and Road and ASEAN partners. Recent examples include Malaysia and Samoa. China has also been opening up more like visa-free visits unilaterally, so you don't need a visa to come into China for a certain number of days for some particular countries. And cultural services exports is another area highlighted by the State Council document and also highlighted by the Central Trade Guidance Fund, the Central Services Trade Guidance Fund. And here on the bottom of the slide, we have Jiang Xiaozhuan, a top trade advisor for the country, who advocated for more backing for cultural services trade in general, not just exports, but also imports and other various emerging formats. Next slide, please. So we talked about how China's surface trade sector is not open enough. And the reason comes down to the fact that like boosting services exports is more simple. It's simpler. You just, put more support to it. That's a big part of boosting exports. But opening to services imports is a much more daunting task because it links to much broader socioeconomic rules. And Beijing's answer to that is something they call institutional opening, 制度型开放, which means reforming some of these behind the border, beyond market access trade rules or internal rules. But this will be a lengthy and gradual process for a lot of you that are also probably familiar with this. It involves a range of challenges. For example, limited local regions' autonomy, the fact that opening up to services imports require policy coordination across sectors, aligning with global standards, national security, IP protection, and so on. And on the next slide, we can see with a quick example, just think of opening like a foreign company trying to open a hospital in China. Excuse me. Yeah, you may be given the right to set up a hospital there, but there are also a range of things that are beyond just granting the access, the market access to set up a hospital. Like think of the licenses and the regulatory issues for doctors, medicine, equipment, insurance, etc. So that really comes down to show us how difficult it is, the challenges that might be involved with all these range of things that will be related to opening up services. Next slide, please. So the bottom line here is that there's still a long road ahead for institutional opening in China, because China is such a massive country with local differences and local strengths. So Beijing will continue to test reforms via smaller scale initiatives to test out which reforms work and which don't. Recent examples include some of the policy moves to test these experiences in free trade zones, service sector pilots, allowing wholly foreign-owned hospitals in some cities, adjusting the negative list for free trade zones and for the national levels for cross-border services, etc. Next slide, please. So we talked about how diversifying trade is a top principle, and China has been making efforts in these areas as well. So for instance, cooperation with BRI, Belt and Road, BRICS, Shanghai Cooperation Organization countries via signing different cooperation briefs, roadmaps, and guidelines. And also some recent FTAs, the free trade agreements, have also incorporated negative lists for cross-border services and also investment access. For instance, with Singapore and Nicaragua. Next slide, please. So we have explored Beijing's policy thinking and also some themes for recent policy moves. So what can we expect going forward? On the next slide, you'll see the few things that we have prepared for this presentation today. These are some of the areas that we think we should expect going forward and keep a close eye on. Some of the moves include, for example, we expect services trade to be highlighted in the upcoming 15th five-year plan, which is Beijing's top long-term plan for the country. It was already listed as a standalone NDRC research topic, which shows that the sector continues to be very important for Beijing. Also, it would be useful to follow the new priorities that were mentioned in the recent State Council study session, which placed a greater focus on services imports. It also featured encouraging manufacturing firms to become integrated service providers. Also, blending AI and services trade was highlighted. And also, we talked about exploring special services exports. More policy support are also announced to be coming by MOFCOM, the Ministry of Commerce, and also NDRC, National Development Reform Commission. Also, another thing to watch out is that if Beijing is like very serious about reforms with concrete moves ahead, some adjustment to, let's say, local government assessment regarding services trade and consumption would also be relevant, and that will also be something to keep an eye on. Next slide, please. So we've talked about a lot of stuff today, China's policy thinking, some moves, and what to expect in the future. And we've also talked about how Beijing's sort of top principle for services trade is to diversify and also to strengthen capacities. To diversify trade and strengthen capacities. So that's all great and nice, but what does this mean for the rest of the world? Engaging with China, and also how does this fit into the bigger picture of how China sees world trade? To wrap up all of this, we believe the key here is to understand that China's opening up efforts in services trade and also in other sectors do not necessarily operate with the principles of like free trade, neoliberal free trade paradigms. China calls it open trade or open economy. These are terms that we see increasingly featured in official documents and in meetings, conclaves. And there are several key distinctions to keep in mind. So in a conventional free trade paradigm, the market and the private sector takes the helm. But in China's open trade, the state remains in control to guide markets and trade flows. Barriers will remain, trade barriers to protect national interests, and also security and development concerns will be driving liberalization path and thinking. That means factoring into geopolitical forces or social stability for security, and also for development that refers to long-term growth and upgrading of the domestic economy that we've been talking about. Comparative advantages and market principles in a conventional free trade paradigm will continue to play a role to some degree in open trade, but not to the extent that they do in like neoliberal free trade thinking. And Beijing is also keen to advertise that their version for open trade does not treat profit making as the highest mantra, as they also factor in principles like innovation, green development, being inclusive to the global south, etc. Next slide, please. So taking into account what open trade means, we can go through some key implications that China's services trade developments would have for India. So in terms of opportunities, opening up is a salient feature for China's open trade. So that means more opportunities to capture the growing market in China. And the fact that more Chinese services champions are determined to develop overseas also mean that there could be opportunity to collaborate and capture some of these third country markets. But with opportunity comes challenges. So all the support that we mentioned China is giving to services export champions mean that they may compete for market share with India champions, especially in some of these IT and BPO sectors that could lead to potential profits or job losses for some Indian firms. And also when China is increasingly seeking deeper trade ties with some countries, for example, via some of the initiatives that we talked about with Belt and Road, BRICS, and free trade agreements, India could also be potentially missing out on some of these opportunities if they're not part of these initiatives and being closely in some of these partnerships. And then there's also the issue that deeper cooperation and potential transfer of know-how, trading with China could also lead to future competition risks. And also in China, there's the issue where the nominal openness level, how it's supposed to be open, and also the actual openness level, there might be a potential gap. And particularly in some of these beyond market access areas that we talked about. And last but not least, in terms of geopolitical risks, we talked about how open trade means that the state will remain in control to steer trade strategically, taking into account security paradigms. So India services trade with China could become a potential area of trade retaliations. Let's say if there are broader tensions or conflicts in different areas like border disputes, strategic rivalry in these sectors. It could also not just geopolitical risks, there could also be political sensitivities depending on how the situation develops. So that would make further integration potentially difficult. And there's also on the flip side where, let's say, China imports more services from India, that could also lead to dependence. And that's also some geopolitical concerns that we can take into consideration. With that, I'll stop here, and I'd like to take the remaining time to have a further discussion with you. Happy to hear any feedback, comments, suggestions, or any general questions. Thank you.
Thank you very much, Alex, for this lovely presentation. We will move to the next part of Q&A, and we'll engage with Alex about the broader theme of this talk that he gave. So the floor is open for discussion. If anyone wants to ask something, just raise the hand. Yes, Preetu, please go ahead.
Hello, good evening, Mr. Alex and everyone here. It was a really wonderful presentation that we your time, Minister. I had a question for you, Alex. Since we talked about local governments as well, so how do you think can local governments in China be incentivized to look at service sector differently? I mean, like, what tangible incentives would local officials need to genuinely prioritize service sectors, opening over protecting local firms, uh, given that they're less competitive than maybe foreign firms, like as compared to the foreign firms. Mm-hmm.
So Alex,
Yeah, thank you very much for that question. I think there are a few ways to look at it. The first thing is also something I touched briefly in the presentation, which is how local governments are assessed in their performance. That's usually an area where we're going to want to look into when China has certain initiatives that they want to push for, and we want to see how well that is implemented on a local level. We can look into like how the officials, how the local governments are being assessed. So now it's mostly focused on how much manufacturing they can boost, how much exports and goods they can boost. But if there are also like significant assessment changes to, let's say, how much services trade they can open, how much services consumption, how much productive services, not just production itself, but production services that these local governments can boost. And when this is being factored into their assessment and promotion and things like that, that's an indicator for how this is an indicator for an incentive that local officials would have to prioritize opening. And I think another area that could be a potential incentive is funding. So we know that China has had a major upgrade and trade-in program in the last year or so, supporting the people's consumption for equipment, for mobile phones and things like that. So the government, the central government also pledged some financial support, not a small amount of financial support for that. So it's mostly focused on goods. It has not focused on services. But if, let's say, the scheme includes services consumption, now that's also another incentive that local governments, they could have more funding to support services trade. And we've already seen a recent policy moves from the central government to boost services firms' loan interest to help them with the loan interest. Now that's also another incentive for these firms to expand, to take up money, to take up loans, to develop some more So I think aside from assessment, we can also look into funding programs and things like that. And also some of these central government mission and tasks is also an area of incentive, or rather instruction, to force, or in some sense like pressure some of these local governments to incentivize them to open up further. For example, there's the ongoing free trade zones program that we talked about. There's also the service sector opening pilots. And then there's a recent, I think just came out this week, to have like 50 pilot cities to boost like new forms of services consumption. So some of these top level missions, top level guidance, that will also be a strong incentive for local governments. So to wrap up, I think there are three things: assessment, funding, and also top level missions.
So Alex, do you think that the difference between what is considered as a service trade and what is considered as a manufacturing, that difference is a little bit not that much of a watertight compartment that we used to think some years ago? Like we used to say that there is a primary sector, there is a secondary sector, there is a service sector. So maybe in this new industrial era, that gap is fading away as we go ahead. Is that a case?
Yeah, I think that's a very good observation, and I think that's exactly what's going on in the world, and that's something that obviously Beijing has picked up on, and that's something we've been mentioning in the presentation, is that in this era we don't just produce things at home, we're producing certain things here, and then we are producing certain things in other countries, and then to link all of these production capacities, services trade is a big part of that. And also, a lot of the development that we're having right now is more digital services, and digital services is obviously another area where it's delivered digitally, and then it's across borders. So I do think the manufacturing and the service sector, the lines are becoming a bit more blurry. And also, I think considering like China has been stepping up like overseas investments, like it's investing in these new production plants in all over the world, particularly in some of these Southeast Asian countries and American countries, global South countries, and Europe. And then just coordinating all of this, it requires services, productive services, manufacturing services, and also like transport services. And I think Beijing is very much well aware of that. And that's why they're not just thinking about services trade in like a silo and in just focusing on certain areas, but also seeing how this one area connects to all the other sectors, be it like manufacturing, production, transport, and things like that.
Correct. So, Ayat, you have a question?
Yes, thank you so much, Alex, for that wonderful presentation. My question is regarding the institutional openings. You said that it is one of the hardest part, and we are understanding the fact that we also have Chinese tensions, security tensions, which come up with the institutional openings. My question is regarding, are we supposed to, or will we see more openings in terms of easy sectors like tourism, or will we see more strategic big breakthroughs in financial outflows? Thank you.
Thanks. Yeah, that's a very good question. And I think institutional opening is a big topic, but it's also very nuanced and very specific. And we think that the process for institutional opening will be gradual, but that doesn't mean that it wouldn't produce in certain positive outcomes. And I think that applying to the case of trade and services, particularly like services trade, it essentially all comes down to like quality. It's a very people-driven industry. Like with goods, let's say you buy like a electric scooter, you have very clear quantifiable metrics. So that's a good electric scooter. That's not so good an electric scooter. But for services, it's not so clear. Like, and also it's very people driven. Like I think that's a good service. This customer thinks it's a good service. It's very tailor-made. It's very personalized. And also in terms of governance, it's also like a lot more complex, and it's also not as well regulated internationally. So I think with that in mind, in the institutional opening topic, like China is going to do a lot more exploring and testing, and also just balancing the trade-offs that are involved. And because this is a very like complex and also sort of a bit ambiguous, if you will, so these are like changing variables by themselves. Like we talked about how China's institutional opening needs to balance security and development, and also these are like changing, factors. So I don't think it captures the full picture to just put like blanket whether this is easy sector or this is a difficult sectors to open. And I also want to maybe push back a little bit on just using like one progress metric to weigh different sectors, because like their opening progress could be very different. Like some progress may be slower and not always on the news headlines for some sectors, but they're significant nonetheless. So I think services trade is very broad spectrum with sectors. They each have their own nuances. So it may be a bit hard to just put like one metric to understand it. And also for the areas that might be more frictions, like I discussed in the slides, I think services trade is deeply connected to the different parts of the economy, to the domestic economy, to broader socioeconomic rules. So there are a lot of other beyond market access areas that Beijing needs to work on, the rules and the regimes that might be local protectionist or have these tendencies, or they're not really aligned with, let's say, international standards. And obviously, like aligning with some international standards that would help Beijing's opening up efforts. But there are also, considerations involved whether, whether they should align with certain international standards, even though it doesn't necessarily reflect like domestic interests. So I think that's also an area where institutional opening needs to work harder on. And then Beijing also has not just institutional opening, but another push called unified national market. So that's also another push to work on some of these deeper, more structural problems that I talked about. Yeah.
So Alex, another observation from my side. Let's just compare two firms at this point, right? Let's compare TSMC and NVIDIA right now. So I was going through the numbers of their PN of their latest annual financial statements. I observed that TSMC's total market capitalization is like 1.5 trillion. NVIDIA stands at around 4 trillion at this point. It might have it varies, but 4 trillion is something that NVIDIA has achieved over the years. But when you see at the annual capital expenditure, like the investment that they make in their existing capital to build their capacities, the amount that TSMC invests and the amount that NVIDIA invests as their capex investment, they are almost equivalent. Like 19.7 billion, if I'm not wrong, and NVIDIA was 20.4 billion. So the marginal benefit of adding a new capital in their existing capacity is more for a service industry like NVIDIA as compared to TSMC. Despite the fact that TSMC runs like a mega factory, the capex investment for them is very large as compared to a service industry like NVIDIA. So you think that is something that China is also realizing now?
Yeah, I think that's precise. That's also the case in China, because like you just don't have as much like with services trade, like the capital expenditure cost, they're not necessarily you can compare that with manufacturing, like you have a lot of upfront investments, and then for services trade it's not necessarily the case like that. And also the return in terms of not just economic returns, but also like social returns. It's more nuanced and also more diversified. So it's not just the economic profits for the firm in terms of like capital expenditure and things like that, but also for the broader like development and governance of China. You create more jobs, and then there's more value addedness. So I think that's precisely one like economic and social driver why China would see, like you said, like see more benefits in developing services trade. And that's something like we see in the 15 5-year plan, which is, as I talked about, is like a long-term development plan for China. So they have like a specific section which is solely dedicated on services trade. And then there's the State Council study section that I talked about. So this is clearly an area that, you know, Beijing sees there's a lot of benefits in developing for the reasons that you talked about, and also for broader like socioeconomic reasons. So it's something that we should keep in mind and follow, you know, subsequent moves, what's going to happen. And then if there's any opportunities and challenges, that's something we should keep in mind.
Right. So, Dia, you can go ahead. Dia has a question.
Right, thank you so much. My question mainly concerns de-risking efforts. So, how much of the push on services trade exports from China to the world eventually acts as a strategic hedge for essentially decoupling the goods trade? Is the goal eventually to create a new, less sanctionable channel for economic integration with the world, even as goods trade, such as that in semiconductors, becomes more politicized?
Yeah, thank you for the question. I think that's a very timely and also interesting question. Like I talked about in the presentation, like geopolitical concerns is part of the equation, but it's a lot more than just geopolitics and just de-risking risks. So we talked about how Beijing's thinking is not just a simple it's not just a simple question of whether, you know, we're closing the gap on surface trade deficits. And I think also applies here. It's not just a simple question of whether we're developing services trade to fill in the gap or the potential gap or the headwinds that we'll face with goods trade. Like a big focus here for China's service trade development is quality. Like what type of services, quality services that can help the country's development. For example, we talked about, you know, services trade that connects to productive services, that connects to goods trade, with, you know, global production capacity cooperation. It's also connected to advanced technology and Beijing's strive for tech resilience and leadership. So I wouldn't necessarily say this is a very binary question of whether they're just boosting services to prepare for goods trade. I think it's more complex than that characterization. And I also wouldn't necessarily say that services trade is less sanctionable as a whole. Like I mentioned, Trump has mentioned about putting tariffs on Hollywood films, and also like in the past, China has also unofficially and reportedly placed like restrictions on South Korean audiovisual cultural products. So that's also curbs on services trade by themselves. And also, like if you break down it by like different modes of supply of services trade, like cross-border services may be harder to curb and enforce, like with digitally delivered services, but that's not impossible. Consumption abroad may be harder to limit because of the backlash and integration with like the local economies, but that's also not impossible. It's been done before, like via travel restrictions, and there was like talks about US curbing Chinese students to go to the US. So that's also possible. And then there are already, you know, restrictions on commercial presence, movement of persons, natural persons across borders to provide services. So I think the bottom line is that it's not something that is necessarily less sanctionable, maybe just not part of the big story that you see on the headlines right now. It could be politicized, but it's not big part of the story now. I think that's the main point here. And also, like we mentioned, like Beijing is not just thinking about in terms of just responding to decoupling or de-risking, but rather it's building a resilience for its economy in the longer term of things, in the longer horizon. So it's also like, you know, maybe it's China's services trade sector. Beijing also knows that it's maybe dependent on certain countries for some sectors. So it's also, that's the reason why they're moving to diversify trade in general, strengthening capacities, forging friendships. So that's also, I think, a part of that story, but although not necessarily connected to that story, but these are the broader like undercurrents that we should also focus our attention on, not just on the political headlines themselves, but also some of the policy movements that are more or less operating from more of a backseat. Yeah.
Right. Gunjan?
Hi, Alex. Am I audible?
Yes, go ahead.
So, as we know, China is the world's leader in the e-commerce, like Shein and AliExpress, but lags in the digitally developed services. In your opinion, what is the internal regulatory hurdles preventing the Chinese service firms from becoming global expert champions in the same way as their e-commerce platforms are?
So, like Gunjan, you are trying to say that the e-commerce services that China has developed, they are very much well diffused all across the world. But when it
Yeah.
comes to digitally delivered services, such as software as a service or cloud computing, it is still not there yet as much as the e-commerce aspect. Is that your question,
Yes, yes.
Alex?
Thanks. Yeah, that's a very interesting question as well. But I think it's probably not as much to do with like domestic regulation, but more to do with like the domestic market and how Chinese consumers and how their behaviors are. Like, I think the deeper problem is that like the smaller Chinese companies, they do not necessarily want to pay for a subscription for services. And then like for the bigger firms, they don't necessarily trust a third party provider for software as a service or cloud computing that are not part of the firm. Like for SMEs, for small companies, like the incentive to pay, I think is weaker because they used most of that they're maybe more used to digital services being free. Like let's say, you can do some of your work on WeChat or on some of these like Chinese platform at no cost. So paying like externally for another software maybe more of a hard sell. And also, it's not like there's a lot of subsidies for them to buy from domestic champions. So I think they might be less willing to like pay a fee for that for smaller companies. And like for bigger companies, like they also, they're very concerned about like controls and leaks and whether our data is secure. So the data has to like stay in-house, so they might be less willing to buy from some of these other, maybe Chinese companies in software as a service or cloud computing. So that's maybe some reasons like the Chinese companies in these sectors, they're not necessarily making a lot of strides. And then already we have like so many very like well-established Western firms, and some of these Chinese companies, I think they also use them. So there isn't like a strong incentive for them to switch to these domestic champions. Maybe this will be something in the future. Maybe the Chinese government will subsidize more of this, but that hasn't happened yet. And also like for a lot of these Chinese firms, their development model is that they sort of become big before they go overseas. And that's the case for like the e-commerce companies that you mentioned. They become big at home and then they sort of build this model abroad. So if the Chinese software companies they're facing challenges to develop at home, then they don't necessarily have the capacities to develop abroad or have the incentive to develop abroad, following the traditional Chinese firms, their development model and conventions. Yeah.
So you mean to say that the consuming habit of this service is very much different within Chinese firms as compared to other West, is it? Like you don't pay a subscription for a software, or maybe you just develop it in-house. Is that the case in China?
Yeah, I think that's the case for at least the big companies. They're concerned about, if we are finding like a third party, maybe a Chinese company, or even a Western company, or other countries' companies, and there's always a risk of very important strategic data being leaked or being in another country. And I think China's market, they're very concerned. It's a very competitive market, so they're very concerned about the security of their data, their know-how, their information. So I think for bigger companies, that's sort of their rationale. And for the smaller companies is that, there are probably different ways to find like free software. There's some free software existing, and then there's, all these other ways to find freer, cheaper alternatives. So that's something they might also opt for because, like I said, it's a very competitive market. So they have to control their costs. They can't put too much money into some of the services costs or expenditures. So for smaller companies, they also have the constraints. And with these two things combined, I think that sort of explain why maybe China's digitally delivered services that you talked about, like the software as a service or cloud computing, it might be lagging behind now, but that may be the case currently. But in the future, we'll have to see, like with all these like potential policy intervention, possible, down the line that could change. But I think for now, that is the case. Yeah.
So a follow-up to this question, DeepSeek has been gaining traction a lot these days, and the base of it gaining that traction is that the approach of how you deliver AI is very much different when it comes to DeepSeek. Like they give you the weight, that's what they were, the open weight model. That is what DeepSeek is. That gives you it gives you some freedom to how you want to integrate AI into your specific use case and at a cost efficient. So you think that that will create some unique AI driven use cases that the world has not figured out yet that it needs this?
Yeah, I think that's definitely possible. I mean, Chinese consumers and also producers, and also just Chinese workers in general, a lot of them are very well educated in the tech space. I think they have the most number of tech students in certain rankings and things like that. So, I mean, with the ingenuity of a lot of the Chinese students and professionals, I think they can definitely think of new ways to do things. And I think we can just look into some other sectors, for example, like they're marketizing the short reels sector. They're making like short films that are just very addictive, and they also sell you stuff. So there's the potential for creative usage is I think quite limitless for a lot of these very smart Chinese firms. And I think some adaptations are already being used in practice. It may not be in DeepSeek, but like some of these Chinese cross-border payment platforms are already using AI to facilitate like the financial flows. And then there's a lot of, some e-commerce companies like Alibaba, they're using consumer algorithms to make sure that, they can give you the products that you want. So it's a broad ranging ecosystem, I think, and a lot of innovation is happening. And also the government is very much leaned on supporting innovation. Like innovation is like the top priority for services trade. They call it like upgrading in innovation. And they also note that it's not just like innovation is not just the process. It's not just the process that we need to innovate to get better. It's also that innovate is the outcome. Like we want to innovate, we want to shock the market, we want to have new ways of doing things. So yeah, to answer your question, I think we should definitely prepare for more creative usage for AI in general. And also like the State Council like specifically highlighted using like AI and services trade. That's like a standalone thing in the recent State Council study session that happened last month. Like there were a lot of things that they can highlight, but they highlighted AI particularly. So that has implications for the tech industries, and it also has implication for the services trade industry. And like with China ecosystem, if the government said, something, we should prioritize this, then all these other policy vehicles, they're supposed to, follow the central government's mandate. So the central government said, we're going to support this area. So all these other vehicles, their mandate is to, implement support for the sectors that the central government has flagged. So we can also expect more like support for that. That's already something we've seen with the AI space, maybe in other areas. And now we see like explicit mentions to focus on like innovating AI in services trade for China. So that's something I think we should also just follow and see how it develops.
So, Pooja, this will be the last question.
Oh, hello, Alex. It was a wonderful presentation. So, my question for you is regarding local governments. So, how do you think local governments can be incentivized for developing demand-side incentives in service sector?
Yeah, thanks for the question. I think I covered that a little bit with the previous questions, but I think your question points more to the demand side of the question. So we've
Yes.
seen a lot of the support so far has been given more on like exports sector, supply side sectors. So like there is this loan interest program that I talked about. And then that's just support the firms to provide the services. But as we know, like in China, the domestic economy with consumption, there's obviously more policy space to focus more on the demand side. And that's like a range of measures to give people, just Chinese people, more disposable income. And I think we can probably see that, there's been like this massive trade-in program that I talked about that is more focused on goods, the electrical appliances, equipment. And then the way that they do it is that they subsidize it when you buy certain products. So that can be considered a sort of supply side measure, but also it has a demand component to it, is that they're giving money to people to buy things. But of course, like with the demand side policy support in China, there's always certain like challenges involved, like how much money can the government afford to give to the people, and then the local government has their own like balancing the budget issues. But I think like just judging from the past policy examples, like one way that they can do it is maybe not necessarily something you see directly in services trade. Maybe it will be a birth support, education support, and all these other things that will also give the residents, Chinese residents, more disposable income so they can spend on services. And then there's also just directly, maybe including services in the trade-in, the upgrade and trade-in program so that people directly receive a subsidy to buy more of these services. But I think so far, just looking at the past examples, it has focused more on giving the firms more capacity to provide services. I think this is maybe concerned to the fact that they're thinking there's this concern in China that there's not enough services supply. There's not enough diversity, and that's why people are not buying. So maybe the focus now is more on just providing a broader range of services products. So that's more a supply side measure. But if there's more provision, the firms are doing better, and then maybe they'll see if these measures actually work, and then they'll see how the demand corresponds to that, and then maybe then we'll see some demand side measures. But that's something I'm speculating at the moment. But just to wrap up, I think the support has mostly been on the supply side, and you pointed out very accurately that there's not a lot of demand side support yet, but I think it could be done via a range of measures, and that's how China has been doing with demand side consumption support, which is a range of different measures. It might not be like a headline stimulus package, but it's a range of different policy vehicles in like the social sector, in the labor sector, education sector, insurance sectors, and then this sort of combo punches approach is something probably you can expect. And then we'll also follow how they support the supply side of the services sector, and then we'll see how that goes. And then maybe after that, demand side support will come. But then there's also obviously the issue where there's outstanding challenges to have a massive stimulus program. So I don't think that's something that is immediately on the horizon. But I do agree that at the end of the day, how much people can buy, it comes down to how much disposable money that they have, and seeing how the policy develops. If there's more support, then people will be more willing to buy, and then they'll be more willing to import more services from abroad. Yeah.
Right. So thank you very much, Alex, for this presentation, and we hope to host you again very soon. So with this,
Thank you very much for having me. Yeah.
So with this, we are at the end of this event. Thank you very much for joining.